Hello and good morning, everyone. It is Wednesday, October 1st, 2014, 5:44 a.m. here in Penfield, New York. This will be a quick video lesson on how to play some early momentum in a consolidation pattern before it runs into the end of the day. So what you're looking at here is SPEX. Stock took off from about 96 cents all the way to, a high of about 157 on Tuesday. Here's how I played it. What we're going to do is take this daily 50-day chart and we're going to dial it back into a 1 minute, 1 day. And this essentially shows you the price action from Tuesday's session. Now you have a screamer to open up, right? So it gaps a little bit. Remember I talked about that 96 cents. So you get that gap, comes in a little at 1, and then boom, explodes all the way up to 136. Now if you didn't catch this early morning rush, what you could do is play the consolidation before it potentially runs later in the day. There's a number of ways that we can look at that. To start, we'll go with trend lines. Right in through here, you can see some support, and that support touches down after the early morning rally before 10 a.m. So you could play that bounce right in through there. I decided to jump in right in through here on some Fibonacci retracement, but there's a number of ways that you can look at this. You can look at this as a bull flag or some sort of pennant in through here, all right, where it's consolidating at a higher low before it breaks out into the end of the day. I chose personally to use Fibonacci retracement on this one, so it's a tool that we use quite often on screamers. Just start that at the bottom of the run and run that to the top. And so what this says is if the higher low holds these retracement lines, then it's in play for a potential move higher from there. So we know that when trading stocks, usually a lot of the activity is at the open and the close, and you can see that really clearly in this chart. Again, it's 1 minute, 1 day chart. So you get that explosion from 1 to 140, and then that higher low in through here around the 50% retracement line. I started in on this one around 11 a.m. I actually bought right in through there, about 10,000 shares at 124. So it traded sideways and then it came back into support again. This is, again, consolidation. This isn't anything to be overly concerned about, but you do have to be careful that it doesn't break down towards the low of day. A lot of times shorts will fade this action in through here, right? This is actually a really good trading strategy for swing or day traders. In that if a stock screams and you don't think the news is good enough for it to sustain that run, carry a higher low, and then run high a day at the end of the day, you might want to fade this for an eventual breakdown lower in the day. But again, these are all things that you have to determine on the fly, and that's what makes trading so interesting. So you get the screamer, play these higher lows in through here. If it holds the purple line here, that's essentially a 1/3 pullback, right? About 30%, 50% pullback, 2/3 pullback, 60 to 68% in through here. So, or 60 to 62% in through here. So you can see it really holds the 50% retracement quite nicely. So I decided to stick with the play despite being down 4 cents a share or $400. It made a move back in through here to 128. Now I'm up $400, but I really wasn't looking for that. I was looking for this move through the high a day and I got it. So I sold into this rally right in through here. And I picked up close to $1,500 on 10,000 shares, so relatively small position. Definitely 10% profit on this one, right? In a very short period of time. Anytime you can do that, that really makes for a nice trade. Yes, it went higher, and I could have held for that, but this is what I was looking for in through here, that high a day break above this top resistance area in through here. And you can see it comes back down and then makes a higher low at that area and then re-rallies into the close. Just a really nice trader, but this is the way you go about playing these picks. So if it were to break this 2/3 retracement area, that would be your signal to get out of the trade. Then shorts from up and through here are winning the trade. Again, they're going to fade this. They're going to look for it to break down below these levels of support. Once it gets through these levels of support, very rarely is it going to grab enough momentum to re-rally and go all the way back through those now resistance areas. Remember, if people were buying these for that high a day run, if it breaks down, those areas now become resistance. These people would be looking to break even. So it's very hard for it to get back through these areas. So in summary, if you get an early morning screamer and you miss the rally, that's the 7-day chart. Let me give you the 50-day chart. If you get a screamer that just runs like crazy and you miss the rally, or you hit the rally and take a profit and want to get back in, The way to look at that, and we'll go back, to the daily here. The way to look at that is by running the fib, all right? And there's your little rally in through there. And so you can see this bottom line in through here, 119 to 127. And I bought 124, and then I sold it right around 140 on the way back up. So just by using the Fibonacci retracement, you can quite often get yourself a good entry on a trade and a bigger profit if it does what you think it will do. So again, 1 minute, 1 day, there's those same fib lines starting around 1, running it to the high, and then scooping up the consolidation. So there's your rally, there's your consolidation, and then there's your squeeze into the close. And why would it run like this? Well, because there's buy side guys and gals like me picking up a position during consolidation. There's shorts fading it, looking for that breakdown of the supports. When it doesn't break down those supports, eventually it runs. And you can see exactly where it did that right here. See, once it got above there, the volume started to scream. And so I sold into this high day rally in through here. That's exactly what we look for. So if you were to draw this wedge in through here, you can see how we had a common area of resistance, but it held that 50% retracement and started to work more towards the top end retracement. And remember, the higher the retracement, the better, because that means there's more demand for the stock. So now shorts are starting to get nervous. The day is getting closed up. They want to cover their positions so they don't have expensive fees overnight. And boom, it breaks through this area. Once it does that, it breaks through the high a day very easily. So that's how I made $1,500 yesterday. It was a day trade. These aren't the types of trades that I'd like to put out as a swing trade. It certainly could have been held overnight as a swing trade. But anytime the stock is up 50% in a day, I'm very reluctant to send that stock out by text and email once it's rallying, because it's very easy for that stock to break down. So it's in, you're out, in, you're out. It's difficult to do by text and email, but we have a chat room for those reasons. And this was a nice 10%, $1,500 win. You really can't beat that. All right, so this is early morning momentum, middle day consolidation, late day breakout. And that's how you play them. You don't have to use the Fibonacci retracement. You can simply use support and resistance with trend lines. It works just as good. However you go with it, just remember, if it breaks down, you got to exercise that stop loss, because if you don't, these can lose momentum and then you become a bag holder. If you're wrong, get out. All right, remember that. That's the best way to be a good trader. Take it easy, everybody, and I will see you around.